Hey, renter retires. It's Adam Schroeder here with another episode, joined as usual by Zach Lemaster, the founder and CEO of Rent to Retirement. And we are flying solo, no guests today, because we wanted to go over just the real estate market in general and kind of the exciting things that are happening out there for investors. Because you've got some people saying, oh, it's not a great time to invest because interest rates are high or prices are, higher than they were previously. And, oh, I just want to sit on the sideline and wait for the perfect time to buy. And, we want to talk about that because those people are going to have fun. So, Zach, you ready to get into it?
Yeah, Adam, lots of relevant stuff. And to your point, I think that it's an ever-evolving market. People anticipated we anticipated a lot of things, right? We anticipated interest rate drops. Those haven't happened. We anticipated maybe some price drops. That hasn't happened. So it's like, what do you have to do? I mean, this is kind of the new norm of just what the market is, right? And so we know that to be a successful investor, you have to adapt and find ways to be successful. You can't let the market dictate your investing, right? You need to dictate your own investing because otherwise you're just following the crowds. And that's not a way to really get ahead. You have to be consistent in your investing. So yeah, good topic to jump into today.
Take a look at the average American who's 60 to 75 years old and ask yourself, do you want to be the average American whenever you get to that age? And I'm pretty sure the answer that we're going to hear across the board is no. So you got to do something different from the crowd to do that. So one of the home sites that people look at the most, probably the most relevant one, if you don't have your site property posted for rent or for sale on this one, you're failing yourself, and that is Zillow. Zillow came out, their chief economist came out recently and wrote an analysis that basically says people are going to be staying in the renter pool because with the current situation that we're in, it's not 20% down anymore to make your property work for you as an owner-occupied. It's up to 35%. Well, it's averaging 35%. Some places in California are 80% you should put down to get a payment that people are going to like. So we're looking at potentially people needing on average 35% down in order to get the payments that they want. Zach, I don't know about you, but we were just talking about the average American, and the average American, last I checked, it comes out to around $120,000 in the bank to put as a down payment. Would you agree with me that that's probably not the average American?
Yeah, I think that's well above what the average person has. And just to be specific, what you're talking about, this article talks about affordability for home ownership. So people looking to buy their first property or their next property to actually live in as a primary residence, and the amount of money they have to put down to have a payment that will be affordable for them to actually afford buying a house, which this is crazy, right? Because there are options where you can put, with FHA, 3.5%, 5% down on your primary residence, but then your payment is so high because of where rates are at and prices, it's just not affordable. So this is causing a housing crisis. So we're not talking about investment properties in this particular article, but I think the point you're driving home is that the more people are going to be renting because of this affordability crisis. Is that kind of the synopsis?
Yeah, it's a whole domino of events because most of the time as people get older, there's kind of a hill that people own homes in. It used to be you started at your starter home, then you started a family, so you moved up, and then maybe family got a little bit bigger, so you moved up to an even bigger home. And then as you get older, you either stay in that home because you can't afford anything else, or you go down and you start downsizing, right? Well, here's the thing. If you've got homeowners right now, I own a home and I can afford the payment, but I think, I want a little bit bigger house, or maybe I even want a smaller house. But I look around and the prices of those and the interest rate on those tells me, hey, you can't afford a bigger house. You can't afford the prices they are now. So am I going to sell my home? No. So then all of those people who are below me in terms of pricing and housing and needs, they're not able to move up. And if they're not able to move up, then those homes down below that, you have new household formations still happening across the country. And as those households continue to form and there's no inventory for them, they've got to live somewhere, right? So if you can get an inventory in your portfolio of homes that are the desired starter or slightly above starter homes for families, those homes are going to be in ridiculous demand because the whole shuffling of housing throughout generations just isn't happening. Like right now, my wife and I had discussed downsizing a little bit pre-pandemic, but then the pandemic happened. We were like, look, we're going to spend more money buying a smaller home right now than we have on our property now. So granted, now there's, 100 of us living in the house, right? So we don't necessarily want a smaller home, but it's a domino effect as you go down. So, you're in demand. It's going to continue to be in demand. And as more households form, it puts pressure on rents. And that's a really good thing and I repeat, if you actually own the asset.
Yeah, this is a huge point to kind of understand just housing in general, the housing trends in the U.S. And the two takeaways that I think about with this, Adam, are so as families grow, people have really three options. I guess one option is to stay put, but really if they're looking to make a move, or if they're in a position where they have to move, they have two options. They can, one, rent, which means because affordability for a comparable house is not an option for them, or an upgrade, they're either going to rent or they're going to downsize, like you said. And so that is really why we focus on home prices, and this is really crucial, right? We don't invest in high-end homes that have more volatility in home prices and have fluctuations from people that can rent those or buy those. We focus on the bread and butter housing that is very predictable, in the highest demand, that has the highest pool of tenant demographics and the highest pool of retail buyers. And these are homes below the median household average, not only across the country, which median household is, give or take 400,000. So we try to be at 400K or below, but also geographically speaking, we want to be in areas that have more affordability, because we know that people are moving to those areas. And those are areas where you're going to have higher demand for rents and resale when it comes time to sell those homes. And those are important things to think about as you set yourself up for success long term.
Yeah, and not only just resale, but cash out. If you want to continue holding it. I mean, the cash out refi isn't very helpful if your property isn't appreciating, because you're not going to get anything out of it, and your closing costs are going to be too high. So you want to see that growth. Even if you've got your new construction property and you're going to hold it for 15, 20 years, you're not going to hold your mortgage for 15 to 20 years. Hopefully you're going to be adjusting that mortgage as it benefits you for either, sometimes a lower rate, but, if you're pulling capital out to redeploy and to do what you want with it. So I just wanted to touch on that, because I thought it was really important as people talk about, worry about pricing and worry about cash flow today and worrying about all these things that you can't really control in today's market. That if you look at, I'm going to acquire an asset that is in demand and it's going to work today. And when it works today, it's going to work really well in 2 years, 3 years, 5 years, 10 years down the road, and making sure you're not stuck on a one sheet in front of you saying this is your year one situation, because year one's great. But as I like to say, you've still got years 2 through 30. And there's a lot more of those than there are year ones.
Well, real estate investing, it's a lifelong journey, right? And I think most people get this, but I think there is a select group of people that look at investing and they're like, I want to retire myself today. And while that would potentially be nice for some people, real estate investing, like when you really understand it and you apply the right strategy over the course of time, using a combination of leverage appropriately, tax benefits, investing in the right locations, like that's how you build wealth over time, letting time do what it does. But you need to be conscious of all these things. And so really to your initial point of like, what do you do, right? If you're interested in investing or expanding your portfolio or getting started and you don't know what to do and you're trying to find deals that make sense and it's just really difficult, sometimes you have to get a little bit more scrappy, a little bit more creative. And we always try to be on the forefront of creative options, especially around the financing side. And so this is something that I think is super relevant, and we're very excited to talk about today, Adam, is some of the new construction opportunities where you can be an extremely creative investor. Because quite frankly, we've been in this business for some time, and we have a combined investing experience, between all of us, but over 100 years we've been investing across the country. So we get to see a lot of different markets, and we're always searching for the best deals to bring to our community. But recently, very recently, we've been able to negotiate and find some deals with some national builders across multiple markets that offer better incentives than we've ever seen. I mean, would you agree with that? Or, I mean, what's your experience been since you've been here?
I think that's putting it mildly. We're doing something that I haven't seen it with any company out there, saying you can get a deal on new construction like we have. I like to call it a choose your own adventure for real estate investing, because we got these deals from we negotiated these deals with our builders, And it isn't just this is the deal, you have to do this to take advantage of it. We just negotiated and said, hey, let's take a percentage, whether that's 5, 7, 8, 9, 10%, and let's just let the investor make a decision, right? Let's, do they want a price reduction? Do they want cash back after close? Do they want a mix of those? Do they want us to take that and put it into a forward commitment rate buy down to get their rate down into the low 4s, maybe high 4s, low 5s, depending on how much you want to throw at it? Let's let the investor decide. Let's put the ultimate control in your hand. We talk about the asset being under your control, but now we're able to say, put everything in your control. We always say interest rates are the interest rates whenever you buy it, but interest rates can be what you want in a lot of cases on this. So it's different than anything I've seen before.
And we're really excited about it because, to your point, I mean, there's been different things offered, right? Where it's like, you get this slight price reduction, or hey, let's buy the rates down a little bit. And that works for the investor, that also it matches their goals, right? But if you have different goals and you're in a different position, being able to take that same type of incentive and structure a deal that's more advantageous for you can be extremely beneficial. And so let's get into the meat and potatoes of what we're actually seeing right now and what we've been able to negotiate with some large builders. And just for a big picture viewpoint, one thing we've done as a business initiative over the past really year that we're just getting to the launch point now is that we've been able to negotiate with national builders at the same level as an institutional buyer would. An institutional buyer, say like Blackstone or something, could come in and buy hundreds or thousands of houses from a national builder that they add to their portfolio. And because of that, they're able to get better pricing, right? And do that. And so the average investor, John Doe off the street that's buying 1 or 2 houses, doesn't have that same negotiation power. But our community, and this is a value add from being part of the rent retirement community, is we can actually go to the builder and negotiate those same type of incentives for the individual investor, because there's a volume play with all of us combined. And so really what that means is that we've been able to offer deals that we haven't seen before. So to be specific, right now and this is on limited new construction inventory in select markets, where the builder is actually offered in some cases up to 10% of an incentive, because they have their net pricing based on a volume play. So we have to commit to so many of these houses. But based on a volume play, they have their net pricing that they need to meet. And they basically said, okay, you got 10% that you can take. And it's anywhere, depending on the inventory, for 5 to 10%. You let the investor choose what they want to do with it. So what that means is that option one, you can take a 10% price reduction. You can come to immediate 10%, and sometimes it's more than 10%, but come into immediate equity on a house. And if you're trying to build a portfolio where you have immediate equity below market deals, this is a really unique opportunity for you. So on a $400,000 house, that's a $40,000 price reduction, right? That's huge. That means when it comes time to refinance that property, you already have that 10% plus of immediate equity that maybe you can put a HELOC on, that you can do cash out refi sooner as that continues to appreciate and you pay that loan down. So that's option one, just a 10% price reduction. Option two would be, instead of the 10% price reduction, you can actually use that 10% to cover closing costs, to buy the rate down. We're seeing rates bought down into sometimes the high 3s, mid 4s, where it's like, hey, the Fed is not going to lower rates that low, at least anytime soon. You can get a 30-year fixed rate plus or minus 4%. That skyrockets cash flow. And that's a huge advantage that we really haven't seen before. And then the third option, and probably the most interesting, at least to me, is where you can take that same 10% and get it as a managerial credit kicked back to you. That means you buy a house for 20% down, you get immediately half of that back. That means all of a sudden you're into a cash flowing property at only 10% down. Your ROI goes through the roof when that happens. That puts money back immediately in your pocket. And there's one other layer of this where it's just like kind of a little bit mind-blowing, and that's where you could take that same 10% kickback and use it in conjunction with some creative financing options. So most of you have probably heard about some of these credit unions that offer low down payment options. For example, we have a credit union that will, on new construction residential, offer 5% down. And this is on multiple properties. This is a portfolio loan where you can buy a new construction property with as little as 5% down. Now, if you combine that with the 10% kickback credit from the builder, that means you not only can buy the property for no money down, you actually get paid to buy an investment property, which is something that is just mind-blowing, Adam, because I've never heard of this type of scenario. So just to review this again, let's say you buy, call it a $300,000 new construction house, that would normally need $60,000 just as a 20% down payment to buy that house, plus some additional closing costs. Well, let's say you use a 5% down credit union option. Now you can buy that property, that same $300,000 property, with $15,000 down plus some closing costs. Well, then you double that, you kind of stack these incentives, or you take 10% from the builder, 5% of that covers your down payment. So you're in the property for essentially zero money down on an investment property, but you're actually getting an additional 5% back in addition to that, right? So that means you get to buy a property on a $300,000 house, you're buying it with zero money down, and you're getting $15,000 back in the bank immediately. You're actually getting paid to buy investment properties, which is just simply mind-blowing. I mean, that allows you to stretch your capital further. This is really creative for people. I mean, you still have to qualify for the low down payment options, which isn't necessarily easy, right? The best thing you can do is actually qualify with the lender to see if this is an option for you. But this is a way where it's like, even if you had $50K to invest, you can save all that money to buy additional properties or to do other investments or in reserves to buy a property and then actually add to that reserves. So now that instead of having $50K, you have $65K, and you still acquired a new asset that you get tax benefits on if you're someone that does accelerated depreciation. I mean, think about that. If you're a high income earner and you're taking accelerated depreciation on these properties where you're getting a huge tax deduction on these things, I mean, for literally zero money, actually getting paid to get tax benefits, where then that adds on to that. It's just really interesting. I mean, these are some of the things that we've been working on, and all of us are doing this ourselves. But without rambling on too much, Adam, I mean, there's just some creative things that we've never seen before. I've never heard of the ability to get paid to buy an investment property with no money down. Yeah,
absolutely. And one of the things that I love about the way that this is structured and the way you operate is, even if, you were able to find a place where you could get the 10% back or the 10% credit, the willingness, the forward commitment that we can do to lower interest rates, I don't know of anywhere else where someone would front the money, because just so people know, rent to retirement has to front some of the money for the rate buy down. Because of the trust that we have with investors, we're actually willing to do that. And I don't know of anywhere else you can go and say, hey, would you, hey, company who's not at all related to the builder, will you pay for me to start getting this interest rate buy down? And so, I mean, the willingness to do that, to do the forward commitment, is something that, even if you found the 10% somewhere else, you're not going to find a company willing to do that. I know that for a fact.
I mean, and thank you for acknowledging that, Adam. I think that, that just goes to show that, like, we're committed with our investor. Not only are we investing ourselves in these projects, but we're also like putting liability out there financially. Right, to be able, we have to commit to so many transactions with these builders to be able to offer these incentives, and so it would be unrealistic for someone to be able to go and do that on their own. If you're a small time investor buying a handful of properties, that's the value out of being able to be part of a larger investment community. But we share in the risk with that, right? So we want people to be able to be successful and have these incentives and make moves in a market where you maybe have limited options. So again, just to review right now, we're very excited about some of the unique options we have with brand new construction investment properties. This is not across the board. Talk to your R2R rep. There are limited inventory, and so it's kind of first come, first serve. You'll see stuff coming and going rather quickly, and so it's important that if this is something you want to act on, like, you need to act on it rather quickly. But as far as for the time being, right now, we have a lot of new construction inventory in really growing markets: Alabama, Florida, some stuff in Texas, Carolinas. These are all, and some of these are new markets for us as well, Georgia being one of them. These are national builders that we've negotiated deals where you can get up to 10%. You get immediate price reduction. Instead of taking the price reduction, you can buy the rate down and cover your closing costs to have a extremely low rate that you lock in for 30 years to cash flow the heck out of your property. Or you can get that 10%, up to 10% back at closing to lower your down payment. And you can be really creative to couple that with low down payment options where you're into a property for zero money down or actually getting paid to buy investment properties. This isn't a sales pitch, guys. We have investors that are being very aggressive with this. This is education for you to at least explore these options. I've been investing for about a decade and a half, and I haven't seen these type of options available to myself, to our community as a whole. So this is really a unique option to be a creative investor, to make some big moves right now that probably in another few months won't be available. So at least check out the inventory online, talk with your rep about fully understanding exactly what these are and which option would make sense for you, right? Because if you're an investor, and that's the biggest thing, like you said in the beginning, having the control to match the opportunity and be able to choose what you want to do. That's huge, because then you can craft and tailor an investment portfolio to you specifically based on your goals. And if you need some guidance with that, talk with our team. But I mean, this could be huge where you come into an immediate equity on a property. If you want to limit your capital, capital is usually the factor that prohibits people from being able to expand their portfolio. So if you have, X amount of dollars that maybe isn't enough to get into a property, well, now can be. And this is really just a unique option to be a creative investor. And that's always what we're looking for, is the most creative options to accelerate your goals.
Yep. Choose your own adventure. Choose your own investing. It's the way I like to say it. Because, I mean, you can, like I said before, you can split it up however you want. You can download the pro forma from our website and just run the numbers and see what makes sense. You can play around and say, what if I drop the price $10,000 and then I get $20,000 back at closing? Or what if I flip that? Or what if I do this, that, or the other? And you can just see what works for you. Obviously, you can talk with someone on our team to do it, but you can also just download the sheet from our website and work with the numbers yourselves. So I can't even stress that even if you don't end up purchasing one of these, it's worth it to look into it to see if it makes sense.
And we had an investor named Taylor the other day that chose to that looked at this and said, well, I'm of course interested in owning my own and building my own portfolio long term, but this is actually a unique opportunity for me to be a creative investor and actually earn more capital. And so what this investor did was buy properties, took a 10% discount on the property. So you have immediate 10% equity, call it again, $400,000 house. That's a $40K price reduction. And then you can turn around and potentially resell that on the retail market at full market value, which the builder is doing with all of their inventory. It will appraise at full market value or higher. You won't be able to find these deals online at below market pricing. So, I mean, if you have a 10% arbitrage model where you're buying a property at 10% below market value and you turn around and resell that, even with realtor fees, which you can easily negotiate down to 4 to 5% in today's market, you can make a spread, right? You could easily make a $10,000 fee or something like that just by buying and selling real estate below market deal, having access to it through our marketplace. Just another creative way that you can think about potentially investing. Of course, if you hold that property long term, you're going to have much more equity than 10% over time, which is our recommendation. But you just want to get the wheels turning.
Yeah, and I've talked with several people who are looking at that 5% down option you talked about it. And one of the big things about that is getting in with less capital, obviously. But if you think about it, you take the 10% reduction in price, that's your equity. You take your 5% that you've put into it. Now the whole point of doing that loan is being able to appreciate to the level where you can refi and get out of that loan and be in the deal for a lot less capital. Well, it used to be it had to appreciate 20%. And some people were like, well, how long is it going to take to appreciate? Is that, what if things slow down and it takes me 7-8 years to get there, which in our markets I'm not concerned about, but whatever. But then I asked them, hey, it only has to appreciate 10% now for you to get out of this 5% down loan. That's almost guaranteed to happen within the first few years. So just keep that in mind as you're continuing to think about these options. Is look at the long haul, talk to us, make sure that it's there. Go to renttoretirement.com, check out our inventory right there. We're not hiding it. If it has a model name next to it, it's probably one of the ones you can get the reduction on it. So take a chance, look over there, schedule a time to talk with us at renttoretirement.com. I guarantee you will not regret at least taking a look at these properties. So if you have any questions, go to renttoretirement.com, schedule a time, and talk with your rep there. Otherwise, we will talk to you on the next episode. Thank you so much for educating yourself today. We'll talk to you on the next episode.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.